If you're 40 and you're thinking it's too late to start investing, you're not alone from my experience. In fact, according to Hargreaves and Lansdowne, only 23% of people in the UK invest in the stock market. That's shockingly low. And one of the biggest reasons is a lack of financial education. This is something I care deeply about. With 24 years of investing experience, I'm here to show you it's not too late. And in this video, we'll cover what to invest in, how to grow your wealth tax-free in the UK, and real examples of how powerful compound interest actually is, even if you're starting now. Chapter 1, why starting late isn't the end. You've probably seen on YouTube about how investing from the age of 18 turns you into a millionaire. And maybe that's made you feel like you're already behind. But here's what most investing channels don't tell you. Most people don't start investing in the 20s. And even if they do, they often don't stick with it. Now, I've got personal experience of this, which I'll cover at the end of the video. More importantly, if you're older, you often earn more, spend less, and stress less about short-term gains. Let's be honest, at 40 or 50, you probably have a higher income than in your 20s. You've paid down or off your mortgage, you don't blow your income at the pub every single weekend, and what you lack in time, you can definitely make up in money and mindset, in my humble opinion. Chapter 2, what should you invest in? If you're starting later, you need simplicity. And most importantly, you need something that actually works. No hype, no guesswork. That's where index funds come in. Instead of trying to pick winners, individual stocks, or time the market, index funds let you own hundreds or thousands of global companies, like the Vanguard fund I've invested into since 2019. Index funds keep costs low and build wealth without needing to know what Nvidia's earnings report actually says. Let's say you invest in a global index fund, something that tracks companies like Apple, Microsoft, Tesla, Nestle, Toyota, and you simply leave it alone. Historically, the stock market has returned around 10% per year over the long term before inflation. There are no guarantees, of course, with any type of investment, but these sort of returns means your money could actually double every 7 years without doing anything. No crypto volatility, no watching CNBC, just patient investing. Vanguard offers some of the best funds on the market, and if you see below, I'm talking about 5 Vanguard funds you could hold forever, and why, in a recent video. Chapter 3, use the right accounts, ISAs and SIPs. Now, growing your money is one thing, but keeping more of it, that's where the right accounts kick in. In the UK, you've got 2 essential accounts, the Stocks and Shares ISA and the Self-Invested Personal Pension, SIP. Here's a little summary of both options. The Stocks and Shares ISA invests up to $20,000 a year, tax-free, no tax on growth, no tax when you withdraw, totally flexible. Take the money out whenever you want. This is what I really like, the flexibility. SIP, invest up to $60,000 a year, including workplace pension. You get free bonus money from the government. 20% low earners, 45% if you're a high rate taxpayer. But you can't touch it until the age of 55, soon rising to 57. Example, you invest $800 into your SIP, the government adds £200. Now you've got $1,000 working for you long term, instantly. It's like getting a guaranteed 25% return on day one before you invest a penny in the stock market. Before we carry on with this video, nothing in this video is financial advice, and the full disclaimer can be found below in the description. Chapter 4, real examples. Even late starters can win. Let's do the maths. With 10% returns and no inflation adjustment, to keep it simple, example 1, £200 a month for 20 years. You invest $48,000 in total. At 10% annual returns, your pot grows to $137,000. Of that, $89,000 is pure growth, basically interest earned. Example 2, maxing your ISA. That's $1,666 a month for 20 years. You invest $400,000 in total. At 10% returns, that's $1.14 million. Even if you start at 50, by the age of 70, you'd have a tax-free 7-figure portfolio. That's retirement changing money. But what if you want to start a little bit smaller? Or you have to start smaller. Example 3, £500 a month for 10 years. Total invested $60,000. Final value, 95,600. It's not about the total, it's about building momentum, peace of mind, and financial independence on your terms. Chapter 5, spending your investments wisely. Now let's talk about the part nobody ever covers. How do you actually live off your investment later on? Let's say you retire at 65 and you want to withdraw 20,000 per year tax efficiently. Here's a smart way to do it. Use your ISA for flexible tax-free withdrawals. Use the 25% tax-free lump sum from your pension. Stay under 12,570 personal tax allowance to pay zero income tax. Example, take 7,430 from your ISA, take 12,570 from your taxable pension pot, covered by the allowance. Result, £20,000 per year, completely tax-free. Add in the state pension, 11,600 a year, and now you've got 30,000 plus annual income without being heavily taxed, even as a late starter. Is this enough for you at 65, or would you want more income? Let me know below in the comments. Chapter 6, the real risk of doing nothing. Let me leave you with this. The biggest risk isn't starting late, it's not starting at all. Inflation is silently destroying your savings, and every year you delay, you're giving up thousands or even hundreds of thousands of pounds in future growth. Action. Don't regret tomorrow. Even if you start small, even if you start late, you're doing something that 95% of people never do. You're taking control. But what after all this info, you're not sure how to invest? Well, if you type yes below, I'll send you a copy of my investing cheat sheet, so you have the info and confidence to invest in the stock market with low-cost index funds. As I mentioned in Chapter 1, I have a personal story I want to leave you with. Hopefully, this will drive home the importance of investing ASAP. I invested £500 a month into a stocks and shares ISA at 18 for 6 months, but stopped and spent all of my money on a lad's holiday to Ibiza. Huge mistake. This was down to a lack of financial education. Let's say I was taught about things like compound interest at school. I know I would have invested from 18 to now, so that's a full 24 years. If I got average returns of 10%, that would mean I would be sat on £594,000. And looking at that huge amount, 450,000 of it is made up of interest earned. This is the power of consistent investing in index funds, the power of compound interest. Summary. So, are you too old to invest? No, you're just in time. Start with what you have. Use tax-efficient accounts. Focus on index funds at first. Then you can move into individual stocks or even crypto with more experience in the market. And stay in the game consistently. I want to help as many people as possible with my investing experience. So you can either watch the videos on this channel if you need a bit of help and support, and if you want to learn even more, you can join my free investing community on School. See below for more info. There you're getting investing courses, you're getting one-to-one calls, you're getting loads to help you with your investing, to help you in retirement, to help you retire comfortably, even early. Anyway, thanks for watching.